Hi, this is Simon with ToughTrader.com, and I wanted to do a very basic explanation of how I use the 50/60 retrace on all time frames in a very basic way to start helping me center and locate where my trades may line up, right? And so I want you to hear that word in there, where my trades may line up. And this is important because a lot of people will find a new tool, right? And they'll take the tool and go, well, this works every time or it doesn't work, right? And it's not, unfortunately, binary like that. The reality is that, like all good instruments, you need additional support and help to figure out whether a trade's going to work or not. So let's get rolling now. Let's get started and we'll just work our way through. And my goal is to keep this under 10 minutes. And this is going to be lesson 1 in the use of the 50/60 retrace. And hopefully I'll break this into 3 10-minute sessions and y'all can watch it at your convenience. And again, remember, this is not a crutch, nor is it a magic bullet. It's a place to draw my attention to look to see if I can find a reason to trade, right? So let's start off on the biggest time frame we can to see if the principle works, right? Again, we're working from a day time frame, and I like to stack up odds in my favor. So I like to go from high time frames to low time frames. So the first thing I'm going to notice here is there's a couple of rules of 50/60. First of all, when it's perfect and we get a retrace, it won't close behind the 62 retrace. Secondly, I believe the best stop, not always an affordable stop by the way, but the best stop is always behind the swing low from which you're measuring. A lot of people don't like that stop. Of course, the higher the time frame, larger the stop, right? So this is not to show you, hey, you take the 50/60 and there's your trade and you make $1 bajillion. Not at all. This is to add to your knowledge as a day trader and get better. So let's start off. So the first thing you'll notice is when a market starts to trend, right, the 50/60 becomes very difficult to attain in a day trading environment. You'll see, and it's a big clue that we are trending, right? You'll see no matter how I drag this up that I just can't get to a 62 retrace. That's a big sign that we are in a trending market, and you'll see that's what we're currently looking at week over week. It's in a fantastic uptrend, right? So number one, that's my first example. Number two, I'm not always measuring from the swing low. I'm measuring from a swing low. So this is a great example. We consolidated through here. The market broke out on a weekly basis, and I'm looking for a good place to get an entry after the break from consolidation. So I draw from the swing low, swing high, and of course this is a perfect example. We push right into the 50 retrace, close. Now notice a couple of things psychologically. This is I'm pointing right here, right? I'm right here. So while it looks easy on the chart, I'm a coach. I'm not a seller of ideas, right? I'm a coach. I want to make people trade better or help people trade better. Notice that if you go, well, I bought the 50 retrace. Well, whoever bought that 50 retrace bought on a big, nasty down day on a Friday, right? How do I know that? Because here's the prior week's close, and that week was a down week, and we closed on the low. And most of the time, your fear factor is going to kick in. You're going to look at the swing lows all the way down here. For me, that would be very hard to carry it over the weekend. And the reality is I'm a day trader. I'd have closed out by then and hopefully had found some way to get short or at least stood out of the way, right? But you can see we closed on the low of the day. That was the 50 retrace, right? Now, the next thing you're going to notice is if I'm on a weekly and I'm trying to find another entry, notice it's a long time before I get a swing low. Actually, all the way through here has been very, very difficult to find a 50/60 retrace really after that point on a large time frame. Whereas before, right, what you're going to notice is when we're going through consolidation process like in here, right, I'm going to find a lot of 50/60 retraces in this area. Actually, I don't quite get it till over here, right? We came all the way back to the 50. Notice that we actually on this particular week, this is a gap down, got back over the 50/60, backside tested that 62 support, and then kicked out, right? So again, it was an area to look in, but it never got that 62 retrace. It was really the swing low. This is a weekly again, started in October and moved all the way to until September till I got a test of that 50/60, right? Notice it did not close behind that 62 retrace, really tested behind quite a bit and then pushed, right? So let's go to a smaller time frame and now see where that would work out. Oh, I have another point. In ES, this is really important to remember. ES long always works easier than ES short. Okay, ES goes up predominantly over time, always has, because of the mechanics, which I'm not going to go into. That's a completely different conversation. But if I pull this weekly, okay, there have been brief periods of time where people have been able to nail the shorts, but the gross majority of the time, this product spends its time moving up. You'd have to go way back to 08 till you found consistent down moves to the downside, and you needed a real big structural problem in the financial markets, which was the housing crisis, to get it to work. Otherwise, you end up with charts like this, and you end up pulling your hair out and possibly going broke, trying to short a market that generally is designed to go up via the mechanics of cash flow. Okay, so let's go to the daily now. We're going to work our way all the way down. So we're just going to spend a little bit of time on the daily because, again, almost none of the people I'm working with are trading on the day time frame. So the first thing you're going to notice, right, this is my swing low. Right, so notice how it can work on very small draws, right? Notice from my swing low to my swing high to my 50-60 back till it launches. And notice in this case, intraday, right, pushed into the 50-60 and then pushed out. So notice I'm going to have multiple swing lows now. So I drop from that same swing low to my new swing high, right? And notice once again, push this time for my 50, which by the way, 50 is not a Fibonacci number. 62 is, 50 is not. Pushes straight back to the 62, holds the 62 retrace, then pushes all the way back up, right? Then you're going to know, so here's where it gets tricky, right? So, and the reason why you have to be able to read price action intraday. If I draw that from this swing low to this swing low, I clearly got blown out here, right? It went behind the 62 and really fell apart, and that's important. It would be very easy for me just to show you where all the 50-60s that work, and there's a ton of them that work in here. I can draw from this swing low to this swing high. I get a 50-60 here. I can draw from this swing low to this swing high. I get a 50-60 that works here. But I would be doing a disservice if I didn't show that if I drew from this swing low to this swing high, I got clearly blown out. So what does that tell you? First of all, you need a trade plan. Secondly, you need to figure out how much risk relative to the time frame you're working on, how much risk you're going to take on a 50-60 setup, and how much leverage you're going to use. Obviously, I encourage rookie traders to use as little leverage as possible till you know what you're doing. I encourage highly skilled, highly qualified traders with great discipline who can manage their stop loss and they understand the consequences. That's where you start to maybe consider taking on a little bit more risk, right? So notice all these that are working at a high rate, right, are long draws to find support on ES, right? So now let's pull it down to a little bit smaller time frame. Let's go to the hourly, right? So we've gone to weekly. Now we're going to look at this from an hourly standpoint. And remember, when I'm doing this work, I'm doing this work on, I'm laying multiple time frames one over the other, right? So what you're going to notice, so remember this is the 60-minute time frame. The daily time frame that I showed you just got blown through and pushed. Look if someone's trading that same swing. Okay, so this is really interesting, right? If someone's trading that same 50-60 swing, notice that it actually got a rotation from the 62 retrace all the way back up, that intraday on an hourly basis, this pushed from roughly 24.46 all the way back up to 24.56. This is a 10-point profitable rotation intraday. It's a losing trade on the daily, right? Also notice where you were looking to go, hey, if I could take these, remember on the daily you couldn't see this detail, right? So this was a retrace, right, from the last swing all the way back over here. Notice when we pushed into the 50 retrace the day before, we push out the 50 retrace, you get a beautiful counter rotation. We push back to the 62 retrace and push back up. I'm not going to cover the shorts for two reasons. I'm telling you now, shorts have a higher failure rate, and I do not want to go through all the caveats, but you can draw your own short location for a 50-60 back. I take very few 50-60s back on their face value for shorts, whereas I will take a 50-60 long in ES. Yes, I realize I probably miss a lot of these pushes down, but I get a lot more winners. Okay, so now we're on the hourly time frame, right? So you'll see we had a beautiful push off the low, and it pushed all the way up. And I'm going, well, where's the location I can start to look for a long, right? So notice, first of all, here's the first push up, right, on the hourly, and look how we push right into the 62 retrace, right? Then again, from the swing low to the swing high, right? I'm looking for location again. There's your push right into the 50 retrace, right? Now, what does this require, right? Notice that this is on your day where I'm coaching a lot of traders. They're like, well, I want to trade on this day. Well, your high odds opportunity came over here, right? So you got to know where that 50-60 is and on what time frame you're looking for. And again, I'm going to drill this all the way down to a 15-minute chart. I'm not going to go to a 1-minute chart, but these overlap. And what you're noticing is, look, we're 10 minutes in. My goal was 5 to 6 minutes, right? Like any complex environment, and the market certainly has to be one of the most complex environments out there. Like any complex environment, there's caveats. There's experience of recognizing what this looks like in real time. There's emotional management. There's psychological management. They're different, right? The emotion is just not getting too high or low. The psychological is feeling the discomfort of taking the trade, and will it work or will it not work, right? Notice again, from this push in on the hourly, right, I now get a new swing high, right? And I push up. There's my 50-60 retrace, right? Notice the next day. Now, notice, I want to show you something. If I get too cute with this, right, and I draw a 50-60 from here to here, I get run over. So this is on a 60-minute time frame. I have to get good at figuring out what this looks like at this very little point of inflection. I have to get good at figuring out what that turn looks like, and I'm not going to cover, that's really for one-on-one coaching is what that's for, because that takes a lot more work to figure that out. Again, if you'll notice here now, if I erase this all, right, and I go, okay, in this area, if I go from swing low to swing high, I get my 50-60. If I took this 50-60 right here, I probably lost money, right? And then there's one more aspect, remember, right? Your time frame is commensurate to your risk reward. How good is that setup going to be relative to pushing you back to the upside, right? And remember, I use volume profile, I use TPOs, and I use market structure to figure out whether the trade's going to work or not. Okay, so I want to show you something here. Again, look at the push up. There's your 50-60. So now, I shouldn't have had, and then one more example. Here's your push up. And we didn't get back to the 50-60. That's where we're sitting right now. This is currently into September 11th. And this is my bogey right in here, this 24.55 to 24.50 for a push lower, right? I know if we close behind, again, I'll have to go and analyze in real time, right? Now, let's take it to a day trading concept. And let's go down to a 15-minute bar, okay, so we can read these. So what you're going to notice is a couple things. First of all, people want to come in and start trading these on a day time frame, and I'm going to show you where the biggest problem is with that. Sorry about my phone. The problem with that is the push up. When you get caught on a balanced day in ES, if you're on a balanced day, the mid is the most horrible place to trade a 50-60. There's a lot of failure when you trade a 50-60 in the middle of a range. Again, this was the middle of the range for the day, and that 50-60 failed, right? I'm not going to do the shorts because the shorts have a high failure rate, particularly in a bull market, right? But then you're going to notice here we broke the IB high. Do you see how on this day we broke the IB high? Now look at this 50-60 retrace. This was Friday. There's your 50-60 retrace. See how it held and pushed? What was the differentiator from a day time frame was that we broke the first hour high, pushed above, then pushed back into the 50-60, and then smaller rotation. Again, your reward is going to be commensurate to what the time frame is from which your 50-60 is coming off, right? Again, notice here, there's no break of the high or the low of the first hour, and that 50-60 becomes dangerous. On the other hand, right? Let me see if I can show you this. Other frustrations that occur with a 50-60 trader, right? So you're waiting for a pullback, and a lot of times it'll break and it'll never come back again. Sign of a trending market, right? So notice as I get down to smaller and smaller time frames, the 50-60 gets harder and harder to use, right? So you'll notice here someone's going to be clever and go, oh, I can get the 50-60 here. I don't take 50-60 retraces at the end of the day. I don't take 50-60 retraces at the end of the day. And again, I need breaks of IB high intraday to really be interested, for the most part, in taking a 50-60 back. And here's another great example. Here's the first hour high right in here. We clearly break the high. I draw my 50-60 back, and I find trade location. Now, I want to point one last thing now that we're to the smallest time frame and close out here. Notice that from the time it reached in, right? Notice how beautiful that rotation is. 2440. From 50 is 2441.50, 2440. Notice it didn't close behind the 60T retrace, and notice that push was all the way back to 2446. Notice all the qualities here. It broke IB high, came back to the 50 retrace. When it got to the 50 retrace, I want to point this out, right? Really important that you see this. Okay, and again, I don't have all the tools I'm using here. It was scary here. Look, this is 15, 30, 45, 1 hour. This is an hour and 45 minutes of constant sell pressure from the high. Okay, so people look at that and they go, of course I'd take it, but when you see an hour and 45 minutes of constant sell pressure, constant down candles, it gets hard to take it, right? It's a big fat rotation. Actually, it's not that big fat rotation. We had a very narrow range. It only looks big and fat, right? But then look at how it contraed on the other side, and look how long it took to push out of there, right? So there's a lot that, oh, and one more piece. If you overstayed your welcome and you didn't scale out, you got a really nasty push there at the close, right? And you ended up making no money on that trade. Now notice, even though it pushed out here, it never broke the last swing low, and the following day it gapped all the way to 2447. I don't hold overnight, so it only matters to me what it does intraday. So it's a great example of, you can't just use it alone. You need a trade plan built around that decision-making process, right? And you also got to realize that usually when the best trade's set up, they usually look quite ugly. Anyways, I don't want to go any longer. It's been 16 minutes, way longer than I wanted to go. My name is Simon. I'm with toughtrader.com, formerly Trade and Perform Coaching. I do both one-on-one trading, and I think probably my most effective work is in the group mentoring room that runs while the market's open. And the goal is to bring you from a boom-bust trader or a losing trader to a regularly profitable trader, right? And in order to do that, you have to build your knowledge base. You have to understand yourself and how you react, have good management tactics in place, right? And be in sniper mode in order to take the money out. So it is possible to make the money you dream about, but you're going to have to work for it. And my goal is to take that long path and shorten it considerably. If anyone wants to email me, you can reach me at tradeandperform@gmail.com. And as always, there's a welcome mat open for a 5-day trial, tradeandperform@gmail.com. I hope this 50-60 tutorial helped. I will do 1 or 2 more advanced 50-60 setups for day traders as I move forward. This is just a primer. Have a wonderful day, guys.